With 3 tools alone, you'll be able to predict the move even before it happens, and you'll be able to predict every single candle that forms on every single time frame on every single pair using the candle range theory, the candle impulse theory, and lastly, your RB. Now, throughout this video, I'll make sure to try my utmost best to make sure that you fully understand this entire schematic. However, if you do need more course lectures on this, I've created a whole playlist surrounding both the CRT and CIT models, allowing you to not only predict the next candle, but also trade every single candle. Now, the first tool that you will have to be using in your pursuit of predicting the next move is the timed CRT. Now, a very big disclaimer here is that you need to be using the UTC -4 to have the exact New York time on your charts, because I'll be using Eastern Standard Time in this video. Now, the entire model of this time CRT formates around 3 different situations, okay? You first need to situate yourself in a position where you see the formation of the first CRT, okay? Now, throughout this video, I'll show you the specific times to focus on and the specific time frames to focus on to get the highest and most precise CRT models, as well as the highest and most precise CRT sweeps to then get the best moves right after that. Now, on your formation of the CRT, you want to be using the 9 p.m. Eastern Standard Time. This is only one of the candles that you can be using. There are several others. And after this, you'll see that price ends up consolidating. You would not be focusing on all this price action. You'll be focusing on whether price purges the high or low. And that's when you're going to initiate the sweep of the CRT, which usually happens at around 1 a.m. Eastern Standard Time. From that point on, you'll then see price make the major impulse / the major move or the next big candle to play for the entire day. Down to the first situation in this model, the formation of the candle range theory. Now, you want to focus on the 4-hour candles, okay? Now, there are 6 4-hour candles that are printed each and every single day, okay? Your goal from the end of this video will then be able to predict at least one of those 4-hour candles where you'll be able to get your trade for that day. Now, there are 3 main candles that you want to be focusing on: the 1 a.m., 5 a.m., and the 9 p.m. And this is all in Eastern Standard Time, okay? Now, the formation creates your price range, okay? All the price action contained between the high and the low of this 4-hour candle, which can either be a 1 a.m. 4-hour candle or a 5 a.m. 4-hour candle or even a 9 p.m. 4-hour candle, okay? Everything that's contained between this high and low is considered just to be a consolidation that is being contained in this range. You are only going to wait until price either makes a sweep of this, the low or the high. The next phase is the sweep of the CRT. The counterpart of the time CRT is the sweep of the CRT formation. These high probability sweeps usually happen around 1 a.m., 3 a.m., 6 a.m., and lastly the 9 a.m. Eastern Standard Time, okay? So coming from us having, for instance, our 9 p.m. 4-hour candle, we then watch price consolidate until it hits around 1 a.m. where we would then look to see either a purge or a sweep or a liquidation of either the low or the high. From this point on, you then be looking onto the next phase where you'll be looking for a reversal. And finally, the candle impulse phase, the last phase of the entire time CRT model, with a sweep of the high area of liquidity, which is provided by the CRT formation, okay? There's liquidity below the low point and liquidity above the high point, okay? Once price sweeps this, we'll then have that major impulse, which is fueled by the underlying liquidity, which has just been taken, okay? Now, the several ways to enter this candle impulse is by either the CIT different models and the rejection block model. I will be showing you guys also further on in this video the specific CIT model that will show you the best results with entering with this entire impulse. Now let's look on to some examples on the live charts. Right here I'm using fastbull.com charts just because of the added feature of both the multiple charts, so I can show you guys both scenarios on both NASDAQ and the S&P 500, as well as the added feature of having over unlimited historical data that you guys can track back and even backtest this theory that I'm showing you guys today. Now, I will be using more recent data, so it's more applicable, so you guys can actually go back and test and see the most recent data using this specific models I'm about to show you. Coming on to this, as I said, you want to be focusing on the Eastern Standard Time. Just make sure you go onto your local time converter from your time to Eastern Standard Time, okay? So this would be our 5 a.m. Eastern Standard Time for our candle, okay? Now this would be where we mark out our CRT formation. We'd mark out the high and we'd then mark out the low. Now our goal is to wait for price to break above either the high or break below the low. From that point, you then want to see price make a sweep and then go to the upside, okay? Now on NASDAQ, we see that we first get a candle CRT which goes below the low point. This is regarded as our sweep. And on S&P, they will then mark out this 5 a.m. candle. We have just marked the high and the low of this recent 4-hour 5 a.m. candle. And as you can see right after that, we also have another sweep. Okay, so both pairs are showing the exact same thing. Usually you also want to have as added confirmation to see a SMT on either NASDAQ or S&P for added volatility in the market, okay? After this, as you can see, we then get a sweep to the high side, okay? So all in this candle, you could have found your trade of the day towards where you take out the low and then you target the drawn liquidity, which would be this high. And the same is said right over here where we see that price then starts to extend and takes out that high point, and we continue going higher onto the next few days, okay? Now, as we move on to the next day, this would be our new 5 a.m. candle for the day on the 4-hour. Here is our CRT formation. And as you can see, now just marked the 5 a.m. candle of the new day for our CRT formation, the low and the high. We now want to wait for a sweep, which can either happen at the 6 a.m. okay? And as you can see right there, at 6 p.m., we then sweep low and then we go higher. Same thing on S&P, we sweep low and then go higher. Now, let me also show you guys how to enter when you know that the next candle is going to be bullish or when you know when the next move is going to happen. How do you specifically enter this? Now, this is an entire schematic from the prediction to the confirmation to the trade and result, okay? So for our time frame, here's our 9 p.m. candle we'll be using. And as you can see, we then mark out the high and the low. Our purge then happens around at that 1 p.m. to 3 p.m. standard time. And we most significantly identify our purge or sweep by this long-standing wick that is opposing the buy side liquidity, okay? From this point, you then look to find any other simple entry model, whether that be a market structure shift or change in state of delivery, where price then comes back and enters at your rejection block right over here. And then price goes to the downside, okay, where we can then target the next drawn liquidity. That would be everything from prediction to confirmation to trading and into the result. Now here is a CRT formation. From this point, what would you be waiting for? The sweep. And after the sweep happens, since we swept the high, we can expect price to move lower. Now that we have this understanding, we can then have our trade of the day to the downside, okay? And here's how the trade will be played out on the lower time frame. We swept out the high. We then made a change in state of delivery to the downside. We then did the exact same CRT formation on the lower time frame. As you can see right there, high is swept and then we take out the low after that, okay? And even if you didn't get this initial entry, you could have still played off of the candle impulse where we see yet another lower time frame CRT be created. Right over here, here's our 6 a.m. candle. Here is the high and the low. Price comes to sweep the high, okay? From this point, you look onto the lower time frame, identify this as a turtle swoop, and then you could enter at the residing order block to then continue that new candle impulse, okay? So there's no need to feel any FOMO because there's always valid opportunities on the lower time frame to continue this same move. This is the understanding of price being fractal. Now, here's a quick tip for using your CRT. You want to trade away from the sweep. So as you can see right here, we had our CRT low and high, okay? We then swept the low, so we're going to trade towards the high. if we did the opposite of that, where we swept the high, we then look to trade down to the low. Now, this is going to be the best POI to predict these CRTs even before they happen. So you end up being ahead of the market. The rejection block. The rejection block consists of the alignment of the close of your previous candle. As you can see right here, candle opened here and it closed right over there. And the opening of the new candle, where the wicks then create the specific PD array where you can see price return to and expand from. As you can see right here with the bearish example, opening of the candle, the close of the candle, and this alignment into the new opening of this candle to the new close of this candle, that which caused this reverse. Once you mark out your wicks, you will see that price then creates a new PD array where you can look to see price return to and then expand from. As you can see right here, price expands whilst it first created that rejection block, and then it creates the CRT, which then creates your high and your low, and we'd expect the CRT to happen towards the low to now mitigate this rejection block. From that point, we can see price impulsing to the upside. Now, if you still don't have full understanding on the concept I'm teaching you guys, make sure to book a one-on-one call with me and my team where we're able to teach you guys fully in depth of the CRT and CIT concepts. And also make sure to be part of the Discord link in the description, where I also post my weekly analysis using the concepts I teach you guys every single day, the various concepts. Here is our formation of the rejection to CRT to CIT. As you can see right here, our first part, we have a rejection block. Price makes that close. Okay, the close happens right over here. And then the opening of the new candle starts there. Looking at the alignment of those wicks, we can see it creates a PD array that in the very next candle, price taps back into it whilst also making the CRT low. CRT high right over there, and the CRT low gets swept out. Price and impulse to the upside. And we have this same model being presented once again. Rejection block, CRT created, tap into the rejection block, and then impulse. Rejection block, CRT created, and then impulse from that. Now, these are all the trades and moves you could have caught and will be able to catch using these three models that I've taught you guys. These three tools are all you need to be ahead of the market: CRT, CIT, and rejection block. Now, this is the brand new CIT model, the PCO. We've mainly focused on our previous candle close. However, the previous candle opening also serves as a rejection point for price. As you can see right here, our previous candle opening serves as a point where we can see price wick just above that and then expand to the upside, okay? Now, the main key point of this is that this is usually mainly used in low volume markets. So anything of a consolidation or any candles that are previously shown to have short bodies and longer wicks would be considered as a low volume market, where we could then apply the previous candle close into the previous candle opening. As you can see right there, low volume market, we have done the CRT. However, we then make a sweep of, or actually a rejection of the previous candle opening. And on the lower time frame, this serves as our entry point too. We see that price peaks above the previous candle opening and then continues lower. Once again, low volume market, previous candle opening, and as you can see right there, also consolidated on the lower time frame. But right over there, you can see this as your entry point, or even enter right after the reaction is created. Now, once again, our full entire trading plan to get into the move even before it happens is the rejection block once it is created, and then the 5 a.m. 4-hour CRT formation. As you can see right there, rejection block created right there, 4-hour CRT. We then have our sweep on the lower time frame at a specific time, where we now start to see price impulsing, and then you see your previous candles opening right over there, serves as your entry point where price wicks to that point and then continues and impulses. And this is the exact trade I showed you guys in the beginning of the video, but now you guys have all the concept and the tools to even get into that trade even before it happens. This even happened during a major news event, which was FOMC. And from this, you guys can fully now be able to predict the next candle. Make sure to watch the full entire playlist to fully understand this in-depthly, and make sure you follow the Discord link in the description. And if you do need to understand this on a personal level, make sure to book a one-on-one call with me.